I'm James King, the banker's Africa and Middle East editor, and I'm joined now by Asfaw Alemu, who is Dashen Bank's Chief Executive Officer, to discuss compliance issues in Ethiopia. Asfaw, thank you for joining us today.
Thank you for inviting me.
Now, you took part yesterday on a panel around compliance, which is obviously a big topic at this year's African Regional Conference. I know in Ethiopia there are no banking customer identification numbers in place. A population of 100 million people, how do Ethiopian banks deal with issues of compliance?
Well, normally what we are focusing at is, the name screening. So that's the only way that, we really identify our customers, and we are using their, personal addresses, because each customer is getting, its identification card from its districts. But yes, in fact, in order to make the compliance engagement serious and also easy, it will be good for the country to have a unique identification number where banks can really identify each client. From the conference that I have attended, I have learned that similar challenge were happening in Nigeria, which is the first populous country in Africa, and they have come up with a solution called bank verification number, which is really the lesson that I have really taken from this conference. But back home, even the government is concerned about it, and I know that there is a project going on to come up with this personal identification.
Sure. Now Dashen Bank itself gains about 45% of its revenues through trade finance. What is your strategy for dealing with issues around compliance related to that activity?
Yes, as you have correctly mentioned, about 45 to 48% of our revenue is coming from the trade finance, and we are serious about compliance. So the first strategy that we follow is we set clear and strong tone from the top, because everybody has to be online and has to align themselves with this one. We cannot as such compromise on compliance issues, because as you have said, I'm going to compromise the 45% revenue that I'm getting. And also even with the international money transfer agents, as you know, there is Ethiopia is highly requires the foreign currency that we are generating, so we are also serious in dealing with our international money transfer agents. So we have looked into our structures, and we have put in place the right structure, and we have clearly spelled out our policies with regards to combating money laundering and terrorist financing. And we have also engaged international consultant with the help of the French Development Agency, and that consultant has assisted us in reviewing our documents and making sure that they are in alignment with the local laws and best practices elsewhere. We are also investing on our people. We are building their capacity, so different exposures and trainings, and also we are investing on technology. So this is really the strategy that we are applying to remain compliant and not losing markets by losing our correspondent banks.
Sure, and I mean, the costs of compliance are rising for lenders across the continent today. Do you think there are some lessons from Ethiopia that can be perhaps drawn upon for other markets in the region?
Well, honestly speaking, Ethiopia is novice in this area. I mean, the proclamation and the legal framework is properly set since 2013. So it's only a 3 years experience that we have in this regard. So I am afraid we might not have much to give to Africa, but from my opinion, what I have observed is the government and the regulatory bodies are serious about this one, and they are engaged, and they closely work with financial players like the banks, insurance companies, and microfinance institutions. So I think this engagement might be a good lesson for those who are really joining this space anew. Otherwise, we don't have that much experience to share, but there is really a room for learning.
Asfaw, thank you so much for joining us today.
Thank you very much for inviting me.